Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a simple, quick, simple, I forget what I'm even saying. Simple, safe, predictable. I gotta close the curtains. There we go. That's just a little bit irritating. All right. Again, James, Dividend Stock Talk. Simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Let's see who is here tonight. Samantha Cruz, how are you today? Princess Couples, how are you doing, Princess Couples? Mud Dirt. Villa People. Robert Tommy. Okay, Life of JG. Sounds good. Jeff Slick, Ari, what's going on? Michael, good evening. Bob the Fish. Bob the Fish. Okay, Bobby G, Commando, Mike, what's going on? Alex, Shaky Creshy, Sigun, Laurel, Underestimated, Cobra, Drop the Casha, Steve, Rocky, Tom, Brian, what's going on? Eric, Trey, Raymond, Mike, Bother, Tate, Tater Talk, Angie, good evening. Mike, Scott, Shrimp, good evening. Lack, what's going on? Suzette, just watch. Mark Mac. I'm just going to leave it at that. Next Gen, what's going on? Capra, Lou, Jeff, Eric, Mendezo. Okay, Mendezo. Universal. Hey, I like your energy this evening. Good evening, good evening. Thank you kindly. Trader Adamoff. Okay. Shane Azarian, how you doing, Shane? Gray, how you doing? Ronald, Hector. Trade all things. Cool. I'd like to have a chat with you, dude. Give me a buzz. We'll, yeah. You like to trade all things? Give me a buzz. Or better yet, drop your number or send me a text. We'll chat. Bertha, have you heard about the new coin that dropped today? US, okay. Supposedly it's a new, okay, cool. The Echo Hookup Digital Magazine Editor. That's a big name. Rachel, good evening. I appreciate you sharing your insights. Thank you there. Gabe, what's happening there, Mr. Gabe? Sprite, William McKinney says hi. Hey, Mr. Bill, how are you doing today? That being said, let's get ready to roll. Let's go over a few rules first and foremost. This trading strategy I'm going to show you tonight. I'm going to show you the complete things, how I pick my stocks, what I do with them, when I buy them, how I buy them, what I'm looking to get rid of them, blah, 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 all that nice, neat stuff. Now, it was created in 2008 when my 9-year-old daughter said, Daddy, we need a new rule. K-Van, what's the new rule? K-Van thinks we need a new rule. Sky Morgan, back again. I seen you here before. Indy, how are you? So K-Van's coming up with a new rule for everyone. We're going to go over those in a little bit. Back in 2008, my 9-year-old says, Daddy, what are you doing? Can you teach me? How many of you actually had your 9-year-old son or daughter ask you to teach them to do something that most adults don't understand? Wow, I like your background. Thank you there, Jenna. Yo, you do stocks. Buy Meatloaf now. That's an interesting name. You like CLFE, never heard of it. I need to be taught. Bertha, hang out, ask questions. Kevin, number 6, don't be at a high. Oh, yeah, that's a good one. So the trading strategy. 2008, my daughter says, Daddy, what are you doing? Can you teach me? So here I am trying to figure out how do I create a way for my 9-year-old daughter to trade stocks successfully. Because we all know if a 9-year-old little girl starts losing her money, she's going to start crying. And guess what? Daddy's going to feel like crap. Yep. I do have feelings and emotions for my 9-year-old daughter. 2, Mama's going to get involved, and guess what? Daddy's going to be sleeping on the couch. So it has to be simple, safe, predictable, consistent, and no way for my 9-year-old daughter to lose. So I had 5 rules. K-Van, he's over there on camera 1. K-Van thinks we should add a 6th rule. I kind of agree with him, but, you know, it is what it is. It kind of goes along with rule number 5. All right, so rule number 1, never buy something you do not want to hold on to long term. If you can't look at a stock and you say, you know what, I would buy that and I will hold on to that till the day I die. If you cannot go into it with that attitude, well, then you probably shouldn't buy it in the first place. Pete, thank you very much. That was nice of you, Mr. Pete. Rule number 2, never sell at a loss. It kind of defeats the purpose. Now, I know that a lot of people say, well, you can't take a small loss and then move on to something else. Well, you can. Okay, I don't like taking losses. I've taken 4 of them this year. That's it. I got like 1,500 trades that I've made so far this year. I lost on 4. I think that's pretty damn good. Bertha, thank you. Pete, thank you. Pete Rose, thank you, Pete Rose. They can write covered calls on anything they like. Absolutely. User 083123. P Ether. Okay, do you have, do I have a dog? Hi from England. Hey from England, how are you doing today? All right, so rule number 3, make sure the company is consistently profitable. Okay. Rule 4, weekly options only. And then rule 5, make sure all the numbers work. We are going to go over each and every step as the night progresses. I'm going to be here till right about 11 o'clock. That's about a little over 2 hours. Just like a good movie, everything's going to come together at the end. Hopefully. So ask whatever questions you want. Do me a favor, please only ask it once. I'm streaming on 9 different platforms. I have 6 screens in front of me, which means there's a lot of questions that keep popping up. I like your strategy. Thank you, Stranger in the Sky. That's how I think. I'm not an expert in any way. Just has major sense to me. All right, just makes sense to you. Okay. Bertha, great. Sit, chill, relax. Let's figure out where we are, where we're going. Are teaching how to trade options. Not all options, just one. Meet Kev. Just grab some puts on SPY, and why do you say weekly options only? Meet Kevin. Hold on that second, Kev. When the mark, I'm not even going to pay attention to that. No. Okay, wow. Okay, so Kevin wants to know why weekly options only. Now, Kevin, I'm going to get to that in a few minutes. How do you decide if you roll on a Friday or wait until Monday and sell a covered call? Calibri, how you doing today? Calibri, nice to have you back again, because you come often. Getting old is no fun, I tell you that much. All right, so just for the fun of it, Kevin wants to know why. Oh, what's that? Yay, all right. All right, so Kevin wants to know why weekly options and not monthly options. All right, Kevin, let's do this, Kev. You ready? I need my glasses for this. Okay, at this moment in time, I got to move that. Oh, that's why. Somebody moved my screen. All right, right there. Much better. Much better. Okay. Here we go, Kevin. You ready? ACI for next week. All right, hold tight. I will pay crazy dividend. Thank you. All right, one question at a time. First question is going to be Kevin's. Why weekly options and not monthly options? All right, Kev, you ready for this? Kevin, what we're looking at this moment in time is called Alcoa. Ticker symbol AA. The current price at this moment in time is $37. So when I do a covered call, I want to do it on a weekly option. I don't do monthly options, and I'm going to show you exactly why. All right? So here we go, Kev. At $37. The closest strike price is going to be the 37. We're not going to do this week because this week there's only 2 days left. That's not really going to do us any good. We're going to do next week, which is the 17th of October. Kevin, are you ready? 10 October, that's this Friday. 17 October, next Friday. 24 October, 3 Fridays away. 4 Fridays away, 5 Fridays, 6 Fridays. Every single week there is an option on this stock. I love weekly options. Now, if I'm going to buy it at 37, I'm going to sell somebody the rights to buy it from me at 37. I honestly don't care what the stock is doing to a point, to a certain point. Remember that, to a certain point. Okay, my major concern is consistency of profit. Consistency of profitability and preservation of my capital. Okay, I'm 61. I could go back to work, but something about saying, greetings, welcome to Walmart. How may I help you find whatever you need today? No, terribly sorry. Okay, I don't even go to work at Home Depot. Oh, good afternoon, sir. How may I help you? Oh, plumbing? Oh, that's right over here in aisle 6. What is he looking for? Oh, that? Great, right here. Yeah, no, sorry. I've been working since 1973. My very first job, 1973. Okay? Tricky Dick was in office, I think. Anyway, that being said, 37. I'm going to sell it through what is called a covered call, one of the simplest, safest, and most predictable trading strategies there is. Remember, this was created for a 9-year-old. Now, I know a lot of crap. I could sit here all night and share all the crap I know, but no, just one trading strategy, that's it. I'm giving it to you for free. I'm not asking for anything. You will not hear me ask, hey, buy this. No, I'm not going to do that. All right, we're all adults. We know how it works. I've written books. You know how to get it. I've read this. I get that. You know how to do it. I'm just sharing information. That's it. That's all I'm doing. This is educational and fun. Yeah. All right. So 37.06, I'm going to sell the 37s. Now, what do I like about the 37s? Look at it. It is paying 129. Okay, so if the stock goes up above 37, someone's going to take that away from me. Yay, I really don't want it anyway. If it goes below 37, I'll hold on to it because, number one, rule one, never buy something you don't want to hold on to. I got no problem holding on to Alcoa. None whatsoever. Okay, so if I'm selling this, 37, 129, let's see what that comes out to. So if the profit is going to be 129 per share, clear, $1.29 per share. I know it doesn't sound like a lot, but that's per share. So one contract is 100 shares, so one contract is 129 bucks. Okay, hold up. Don't get so tight. All right, now, if I'm paying $37.06, let's divide it by $37.06. Divided by $37.06. Grand total is 3.4%. Okay, you get that? 3.4% for 1 week. 1 week, 3.4%. Now, let's look at a monthly optionable stock. Everybody's favorite, O-Realty. Okay, so here's O-Realty. The current price is $59.01. Awesome! Let's sell somebody the 59s. Now, we're not going to do this week because this month because there's not enough time left there. So we're going to do next month. Next month, 59 doesn't have 59, so let's do the 60. Okay, so the 60 is going for 90 cents. Okay, 90 cents. That's 1.5% plus the extra dollar that we're getting here. Okay, so if I buy it at 59 and I sell it for 60, I'm getting 90 cents plus that extra dollar. So let's call it $1.90. Because, wait a minute, not $1.90. Yeah, $1.90. So we're getting $1.90 on a $60 stock. Well, let's divide that up. $1.90 divided by $60. That's 3.1%. for the month. Do you understand the difference between the two? 3.1% per month. Let's do the math. Let's do it all the way. Okay, all the way. 3.16% for 1 month. Let's multiply it by 12 because after all, there are 12 months in the year. Now, don't get me wrong, 38% is an awesome rate of return. It really is. For most of you guys. For me, not so much. But for most of you guys, you might love 38. Now, that is 3.16% every month for 12 months. Great. You like monthlies, you do it. Now, let me show you 3.4% multiplied by 52, because that's the other example we were just using. Okay? Was it 3.4 or 3.2? Let's do 3. No, it was 3.4%. Yeah. Multiplied by 52. Now, there's a huge difference between 38% for the year and 176% for the year. Well, let's look at the other way. Well, what if we only got 1% every week? Well, even 1% a week is still 52% per year, not compounded. If you compound it, it's like 67% per year. Well, it's still a lot better than that 38. I don't like monthlies. Not only that, hold on. Another reason why I don't like monthlies. Okay, Kevin, this is the other reason I don't like monthlies. Let's move this over so you can get a better look. Okay, what you're looking at here is 30 days of trading. Today is the 10/8, which is the 8th day of the 10th month, also known as October 8th. So 30 days ago today would be 9/8 or September 8th. This is 30 days. Okay, the bottom is here, 58, shoots up to 61, drops down to 58, shoots up to 60, drops down to 59. Awesome. Now, Kevin, tell me, where is this going to be in 30 days? Because that is 30 days. Now, tell me where it's going to be in 30 days. I don't like monthlies because it's hard to tell where the heck it's going to be, number one. Number two, the option premium is not as good as the weeklies. It's easier to find out where it's going to be in 5 days as opposed to where it's going to be in 30 days. I don't like monthlies. They just don't pay the same. If I'm going to be spending my time and energy doing something, well, I want to be compensated. If it's the exact same trade, buy it at the current price, 59, sell it at the current price, 59, or this one's going to be 60. But still, if I'm averaging 1% per trade, weekly trades is going to be 52 simple interest. Compounded is like 67. Now, on the flip side, monthly, you get 1 or 2%. You're only going to walk away with 12 to 24% for the year. That's not bad if that's what you like. Well, I don't, and that's not what I'm teaching. I don't like monthlies. The numbers just don't work for me. If you like them, hey, more power to you. But terribly sorry, Kevin, I don't like monthlies. I don't do them, and hopefully you understood that. Next. So, if you would, please, if you're going to suggest a stock, make sure a couple of things. Do not give me a stock that's at the high of the year. It's going to do nothing but piss me off. Because there's nothing we can do. See, at least this, as much as I dislike monthlies, at least this, okay, I have an opportunity here. Okay, here's the high, it drops, back up, back down. Great, when it hits down here, maybe jump in, so ride that back up again. Because that's what it does. Look, up, down, up, down. Maybe it will go back up again. Because that's what stocks do. They go up, they go down. That's it. So please, don't send me one that's at the high of the year. Don't send me one that's in the pennies. I don't want to see it because it doesn't fit what we're doing. We're looking for a simple, safe, predictable, consistent 1% per week on pre-qualified dividend stocks. And the reason why pre-qualified dividend stocks is because they're predictable. they do the same things over and over and over again. They go up, they go down. They go up, they go down. Just before the dividend's paid out, they go up. After the dividend, they have a tendency to go down. Is it guaranteed? No. There's only 3 guarantees in life. Okay, and that ain't one of them. All right, give me something good. Oh, remember that song from, I think it was the 70s? Tell me something good. Tell me something. All right, here we go. Hey, Alex is here. Hey, Alex. Oh, all right. All right. What do we get? Can't read the screen, just for your information. Okay, who is that? Kachuma. So, Kachuma, you're new here. Okay? Don't feel bad. If you didn't know, which you probably didn't because you're new here, this screen behind me, okay, this screen here is live on YouTube. So rather than trying to watch this on your phone, go into the other room, tell the little kiddies, hey, time for bed, daddy's taking over the TV, and then pop it up on your big screen TV. Okay, that big 60, 70, 80-inch screen TV you got in the other room, yeah, good, put it to good use. Learn something tonight. So yeah, it's being recorded on YouTube. So if there's something you like, you can always go to YouTube after we're done and rewatch it. Okay? Once you get to YouTube, you will notice there's over 1,200 videos. So I've been doing this for a while. Nixon is from my hometown. Alex, I wouldn't be telling people that. Tricky Dick, he screwed us real good. Follow your heart, MFIC. Now, I'm terribly sorry. I have no idea what that is. MFIC. Mid-cap financial investments. Was there something that follow your heart? Was there something that I said you didn't quite understand when I said weekly options only? Okay, this here, October, November, December, March, those are months of the year. That's a monthly optionable stock, and that's oh, hell no. I don't do monthlies. They just don't work. Okay, follow your heart. MFIC is a no. For me, anyway. You like it, you do it. I don't do stocks that don't pay me enough. And monthlies just don't pay me enough for my time. Carlos Stewart, how are you today? Ruby the Rotty. How you doing, Ruby? Jobo, okay. Almost everything is at the high of the year. AMPX. Universal, what is AMPX? AMPX. Hell no. You weren't listening either. Got it, thank you, you're welcome. Paul D, how are you doing today? MFIC, I already looked at that one, it's a no. Okay. Eric wants to take a look at Dell. I like Dell. Oh my, Eric, come on, dude. You've been here long enough. What is this? Didn't I just say don't show me anything at the high of the year? Honestly, what the hell are we supposed to do with this? Okay? Follow your heart. 12% dividends for MFIC. Okay, see, follow your heart, 12% dividends, great. Okay, that's giving you 1% per month. So if you want 12% per year, hey, what the hell are you doing here? We're looking at 1% per week, which is 52% per year. And I'm not looking to catch the dividends. I'm looking to catch the insurance premiums. ULTY, oh my God, I hate that thing. Do me a favor. Cussery, okay? Go check out the profitability of ULTY. How many years have they been consistently profitable? Now, when I mean consistently profitable, I mean that the dividends are higher and higher and higher and higher year after year after year. You're going to find that ULTY, the profits are not consistent. And it's definitely not 20 years old. Lib Trader wants to take a look at Merck. Joe Boo wants to short it. Okay, Joe Boo, you do that. Okay, Joe, Merck, MRK. I actually have some Merck. I do. Now, once I take a look at a stock, it's always, for me, it's always 1, 2, 3, A, B, C. I go in order. Okay, I do this, then I do this, then I do this. Every single one I look at. Step number 1 is come up with a list of stocks that you like. Remember I told you we're going to talk about the list? Well, here we go. Now, we check every week. This week there's 10,570, I believe. Somewhere in that area. That's a lot. Okay, now, how do you decide which stocks you like out of those 10,570 different companies? Well, the way I look at it, I only want the companies that have consistency in profitability. And guess what? When it comes to money, there are a lot of people that are interested in that information. So there are a lot of people that look at every single company to see how profitable are they and how many years of profitability do they have. Okay? Now they've been doing it for quite a while. So, cream of the crop, number 1, head cheese. They call them the dividend kings for a reason. In order to become a dividend king, you have to have, are you ready for this? 5 decades. That's 50 years. Do you understand that? 5 decades of consistent increasing profits. That means every single year they make more and more and more money. And if you do not make more money this year than you did last year, you do get booted off that list. And it will take you 50 years to get back onto that list. Okay? So, companies that are on that list, they try their hardest to stay on that list. The second list is going to be called the Dividend Aristocrats. Now that is about 67 different companies that have 25 years of increased profits. And then comes the Dividend Champions. 25 years of increased profits. The rules are a little bit different between the champions and the aristocrats. And I think there's twice as many champions as there are aristocrats. I think like 150. Now we come up for list number 4. The Dividend Contenders. Not quite 25 years, but more than 10 to 24. There's over 3. Don't get old. It ain't fun. There's over 300 companies that have 10 to 24 years of increased profits. And then bringing up the tail end, list number 5, we're going to use Warren Buffett's list. Now, I have to admit, I haven't looked at his list lately. From what I understand, he did add some more. Okay, I don't know what those new ones are. Joe Boo, it's your first time. Afternoon, Mr. Joe Boo. Just sit, chill, relax, absorb what you can, ask questions. Eric rolled 5 times this week. Thank you. You said you like Dell, so I jumped in a week ago. That's a great idea. I do like Dell. All right. MRK. All right, so we're going to look at MRK. I'm going to say no to MRK for this week, but I want to write MRK down for 2 weeks from today. Now, I'm going to explain why in a second. Let me write it down first. Okay, now the reason why I'm saying I'm not going to do, even I already own MRK, so that's not an issue. But getting into it as a new position, I'm going to say no for this week, and here's my reasoning. Well, anytime I look at a chart, I'm looking for 5 things, okay? And it takes me 2 to 3 seconds to find them. It should take you 3 to 4 seconds to find them. Now, you might be scratching your head saying, I don't think so. Let me show you. You ready? It's really easy. You can take a look and you can see it in like 3 seconds. Okay? You ready? Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it now? And number 5, down, up, down, up, down. That's it. It should take you 3 to 4 seconds to see that. High, low, was, is, down, up, down, up, down. Not that much, right? Now, after I do that, I want to go check a look at the numbers. Remember I said rule 5, make sure all the numbers work. Let me explain. All the numbers work. What am I buying it for? 86.40, 86.40, 86.40, 86.40. What do you think? The price is 86.40. It's up there 4 times. The reason it's up there 4 times, it is the last trade of the day, or also known as the closing price of the day. So if that's the closing price of the day, hypothetically speaking, that's what we're buying it for. Now, the reason why this one is a no, here we go, the last 30 days. The last 30 days will give you a great idea of where it's going next. This is the last 30 days. Same 5 things. High, low, was, is, sideways, down, up, down. Simple. Okay, today we're right here. We had a high last week. Now it's dropping like a rock. Well, that's because of this here and this here. Whatever the hell happened last week to go from 78 to 91, well, we missed that opportunity. I should say you missed that opportunity. I bought this thing like 3 or 4 weeks ago. Anyway, that being the point, it's going to be a no this week because here's your bottom here. Here's your new top right there. And I'm going to wait for this thing to keep coming down, find a new bottom, turn around, go back up. That's when I'll look at it. So more than likely, my humble opinion, okay, I think 2 weeks. We might take a quick look at it next week to see, how it's coming down. La 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 la. Oh, Super Cooper, AGNC. AGNC. Now, who asked for AGNC? Super Cooper. I'm going to say no. And this is my reasoning for saying no. Okay, it's got nothing to do with the chart whatsoever. Here's your bottom, and she's shooting up nicely. Great, awesome. The reason I'm saying no for AGNC is right here. 0, 0, 0, 0. So if you're wrong, you get nothing next week, the week after, the week after, the week after. Okay, so no, because the premiums are horrible. That's why I say no to AGNC. It's got nothing to do with the company, got nothing to do with the chart. Whoever is the market maker is paying crap for a premium. And it's not the only one. There's a bunch of them like that. ET, which is Energy Transfer, is another one. Okay, MG wants to take a look at PAGs. What the heck is PAGs? PAGs. Oh, another person that doesn't listen very well. MG, when I say no to monthlies, October, November, January, February, that's a hell no. I don't do monthlies. The numbers just don't work. Alex, is it a good idea to diversify your covered calls or buy multiple contracts? Well, Alex, you should always do what's comfortable for you. Okay, never put all your eggs in one basket. Diversification is a great idea, but do it, I want to say cautiously, but make good choices. What movie is that one? Oh, that was on Freaky Friday with Jamie Lee Curtis and Lindsay Lohan. Make good choices, honey. Anyway, Kevo, ULTY is musical chairs on the Titanic. That's a good one. I never heard that one before. That's good. Joe Boo, first time on the show. For clarity, you want dividend stocks aren't at a 52-week high and have weekly options. Well, absolutely. The gray elephant, what do I think of IOBT? What the? See, anytime I say, what the hell is that? It's usually not a good thing. Okay? Especially when there's no options. And look at this. Didn't I say a little while ago, don't show me something that's in the pennies? A 40-cent stock? Hell no. There's no possible way on God's green earth does this thing have 20 years of increased profits. I seriously doubt it. It's at 50 cents. Why the hell am I looking at that? Sorry, gray elephant. Danny, Which of your YouTube videos give you step-by-step how to use Think or Swim for weekly options? You know what, Danny? I think I'll make one specifically for you. I'll throw it up on YouTube. Setting up, I'm going to write it down so I don't mess it up. Okay, write it down if you want, Danny, right? Because this is the title I'm going to put on it. Setting up TOS, which is Think or Swim, for weekly options. I'm going to write make a video. Make video. There you go. All right, so give me a day or so to whip it together. It's really not that difficult, and we'll go from there. Eric, Nucor, N-U-E. Interesting. Same 5 things. You ready? High, low, was, is, up, down, up, down, up. Yeah, right there. Look at that. That's what it's doing right now. 137.84. 137.84. The 138s are going for 295. Well, yeah, that's 1.5%. So this looks like it's going to be the first opportunity for us to walk through a whole trade to see what it looks like. I like Nucor. I bought it many times. All right, and I'm going to need the glasses for this one. All right, so Nucor. Did you see what I did first? First thing I did was look at the chart. The high, the low, where was it, where is it? That's what it's doing. Then, before I did anything else, before I even looked at any of these numbers, because the numbers don't mean anything to me, and I'm going to show you why in a minute. 37.84, that's the current price. The closest strike price to 137.84 is going to be 138, and that's right here. And the 138 is selling right here for 295. Well, 295 is more than 1% on a $138 position. It just is. That's more than 1%. That's what I'm looking for. Number one, I like the company. Number two, the chart looks okay. Number three, it's offering me more than 1.5%. Yes, yes, yes. So now let's go to the next step and look deeper into the chart, because I want to find out a little bit more information. Okay, it's not worth it to dissect the chart first if the numbers aren't going to work. And that happens once in a while. You look at a good company, oh great, this is a great company. But then you find out it's not really financially worth your time and effort. Well, at least not worth my time and effort. If I'm not getting 1%, it's not worth my time and effort. All right, so grab my little mouse. Here we go. A year ago, 149. We top out on the beginning of November at 171. Bottomed out on TDS day, that's second week of April, 97.72. Now let's go back for a second. I need to point out something. I need to point this out just in case you don't realize what it is you're doing. All right? The high of the year, 170. The low of the year, 97. That is an $80 drop in price on a $170 stock. An $80 drop. It's probably a 45%. It's a big drop. Wait a minute. No, that's more than 50%. Is that right? No, it's about 45%. So it's like a 45% drop. If you are not ready for that kind of action, you probably shouldn't be playing this game. And don't kid yourself, this is a game. You need to learn what the rules are. And there's a whole bunch of them. Each trading strategy has its own set of rules. So I'm going to stick to just one trading strategy and show you the rules as far as I have been using them. Now I'm going to admit, 100%, I do not know this whole trading platform, because there's a lot of information in here that's got nothing to do with what I'm doing. I learn what I need, and then I use it. Okay, if you want to show me something that's got nothing to do with what I'm doing, you're just wasting your time. Okay, if it works, don't fix it. Okay? If it's working just fine, leave it alone. These are the mantras that I grew up with. If it's working, leave it alone. Okay? If it's working fine, don't touch it. That's the one. If it ain't broke, don't fix it. If it's working fine, leave it alone. That just kind of makes sense. Okay, so let's jump in and keep on going. So the low of the year was 97, and that was back the second week of April. Let's look at the last 90 days. The last 90 days was the last 3 months. Same thing. High, a low, where was it? Where is it? Up, down, up. See, definitely in an upward trend. Here's the high. Here's your new bottom. Now she's going up. Okay, argue, bitch, moan all you want. You cannot argue facts. Okay, this is not politics. They like to argue facts. Well, this is a fact. Here's the high. It's another fact. Here's the new current low. The low of the 90-day period is there, but this is the new current low. So she shoots up, goes back, now she's going up again. Okay, I love facts because you can't argue them. We want to go last 30 days, which would be right there. Okay, here's the last 30 days. The last 30 days gives me a good idea of where do I think it's going next. Okay, 30-day high right here. Okay, going up. Here's the bottom here, going up. Okay, 137, the 138, 295. Let's do the whole thing. The whole thing, because it looks good to me. And here's the thing. Do you like this company? Is this a company you want to buy and hold on to? Now you get two choices. Choice number one, okay, hold on to it to the day you die. Get a covered call every single week. We're going to go over those numbers in a little bit. Never sell at a loss and go for your target. What's the target on this one? 138. What's it at now? 137.84. And it's in an upward trend. Okay, can it hit 184 by the end? 188 by 138. 138, which is right here by the end of the week, right there. Can it? Could. So let's find out. Let's get rid of this because we don't need it at this moment in time. We're going to change this to covered call. Now, when I say there's a lot of trading strategies, check this out. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, eye condor, vertical roll, blah, 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 blah. There's a whole bunch of them. Each one of these trading strategies has a whole new set of rules to go with them. So people always ask me, hey, James, what about this? Hey, James, what about that? I said, have you perfected this one first? Because this one here that I'm teaching you now was created for a 9-year-old. You can't get any simpler than a creation for a 9-year-old. Simple, safe, predictable, consistent, 1% a week. Now, just think about that. 1% a week, that's over 50% per year. If that's not enough for you, well, any one of these will give you more money. But with more money, more time. Means you have to learn more stuff. You have to sit in front of the computer longer. Burner! Woo! Thank you. You got to sit in front of the computer longer, and it's a higher risk. Higher risk, higher reward. Okay, so I'm looking for 1% a week. That's 50% per year. I'm perfectly okay with that. Somebody asked me about SPY. That's got to be a newbie. Macho Alpha. What about D's? Brian, I'm not falling for that one. So, covered call. Let's do one right now. We're going to do the 138 right there. It pulls it up. I'm just going to show you one, and then you have to decide how much money do you have and what do you want to do. Okay, so I'm going to show you what one is. Okay, we're all adults. We know what our mortgage is. We know what our insurance is. We know what our gas bill is. We know what our grocery bill is. We know what our entertainment is on a monthly basis. Okay, your investments. You should know what your investments are. And if you're not doing your own investments, well, shame on you, number one. Okay, you're an adult. Okay, hypothetically speaking, you can't be here because I do have age parameters on these. Okay, it's not for children, so I'm assuming you're all adults. Okay, you're an adult. It's an adult game. It has adult consequences. Don't ever buy something you don't want to own. Don't ever do something you don't understand. Okay? It's just that simple. And another thing, you may argue all you want, bitch, moan, complain. It's coming whether you like it or not, whether you agree or not. And what is it? It's retirement. You're going to get to a point where your boss is going to say, hell no, stay home, you're a liability. You're going to age out eventually. Tick tock, ain't no way to stop the clock. You just can't stop it. Friday is coming whether you want it to or not. Okay? Your 50th birthday is coming whether you want it to or not. Retirement is right around the corner whether you agree or not. So you got two choices, and only two. Take accountability, do it yourself, or give up accountability and let someone else do it for you. And I can pretty much, I'm pretty sure most of you will agree. Nobody has more interest in your money than you. So, learn to do it yourself or give it to someone else. Plain and simple. Here's the trade right here. Let me read it. Let's go over everything, and I'll explain things as we progress. The green line is the order right there. I always tell people, read it out loud, separate each segment, because it looks like a big run-on sentence. Here, let me read it to you. Ready? Buy +1, covered NUE 117, OCT 25, 138, CALL/NUE market to open, close parentheses. It's like one big, huge run-on sentence. You need to know what it stands for and what each of these little doohickeys mean. So let's break it up one little bit at a time. The very first one. Buy one, covered call. Okay? Buy one, covered call. NUE 100. That's Nucor, NUE. That's the stock symbol. 100 means it has weekly options. That's all that means. 17 October 25. That's the date. Not this Friday, next Friday. So this option strategy right here, this trade here is going to expire next Friday. 138 call. That means I'm selling it to someone else at 138. Well, what am I buying it for? 137.84. That's only 16 cents away. Can it make it? Maybe it will. I don't know. Okay, at the market. To open. Now, what does to open mean? I didn't stutter, and I didn't repeat myself. It's what it says. To open. Okay? That means there's two trades. When you're buying a covered call, you're actually doing two trades at once. You're buying the stock, and you're selling it at the same time. Or you're selling somebody the right to buy it from you at the exact same time you're selling it. What questions do we have over here? No questions over here. Holy Charlie. Okay. Now, do you remember earlier when I said simple, safe? Now, a covered call is one of the safest trading strategies there is. It's so safe, you can do it in your IRA. Okay, a lot of trades you cannot do in your IRA, but a covered call you can. Okay, the government says it's a very safe trade. You can do it in your retirement account. Now, remember when I said predictable? Okay, simple. It's an easy trade. Safe. The government even says you can do it in your IRA. It's actually that safe. Predictable. I know exactly what I'm going to make before I even do it. Now, for the most part, people will buy a stock and wait for it to move up. Well, you got to wait for it to move up. And then you got to decide, what profit do I want to take? How long am I going to let it sit there? Not so with a covered call. It's kind of a set it, forget it, don't really care what's going to happen type scenario. That's why I like it. Set it, forget it, walk away. Here's the thing. Maximum profit on this particular trade is $333.50. I already know my profit is going to be before I even make the trade. Unlike buying a stock, you buy the stock and you have to wait for it to move. This gives me my profit instantaneously. Can you say that? Instantaneously. Okay, so if I buy the stock first thing in the morning, I sell the option first thing in the morning. By 9:31, I will have bought and sold my option because I'm going to do it at the market. The reason I do it at the market and not limit order, here's the difference. Limit order means this is what I want to pay. That's it. So an order like that goes to the market maker, and the market maker puts it on his desk and says, I'm going to fill it when I'm damn good and ready. Now, a market order, that's a truly American order. Here's why I mean by it's truly an American order. Because I want it now, I don't care what it costs. That's an American order. I want it now, give it to me now. Now, the reason why I do that order for every time I jump in, because it's double order. I'm doing the stock and the option at the exact same time. So the option and the stock are tied together. So I know exactly what my profit already is. Give it to me now, give me my profit. Okay, so at 9:32, I can walk away and I already have my profit. The nice thing about it is I have a credit card and a checking account attached to my trading account. So anytime I want to buy something, I can use my credit card and it gets right to my trading account. It works for me because I'm at that age where I know what my monthly bills are and I get a paycheck every Monday morning because I buy my stocks on Monday morning, I sell my options on Monday morning, and lo and behold, by noon, that money's sitting in my account and I get to spend it for the most part. Once in a while, you have to wait for settlement. Sometimes that's a day or two. All right, so maximum profit on this one trade, 333. Cost of trade, including commissions and fees. It tells me everything I need to know. Cost of the trade, 13,467. Let's do some math to see what the rate of return is on Nucor for this week coming up. All right, for that, we need the calculator. If my profit is $333.50 and it's costing me, my investment is $13,467, gives me a grand total of 2.47%. Now that's over 1%. So here's the big question. Actually, there's a bunch of questions. Number one, does it make sense? That's number one. Number two, do I like this company? Number three, do I like this company at this current price? Where the hell did it go? It's there somewhere. $137.84. Do I like this company? Am I willing to hold on to it until one or two things happen? Well, I get my target price, 138, or I hold it to the day I die. But I always write a covered call every single week. Think of it as a vending machine or a weekly cash producing asset. Well, this current asset is costing me $13,500. However, this weekly, I gotta get that word in there, this weekly cash producing asset, this week it's giving me 333. What's gonna give me next week? 300, 350, 275? Whatever you pay for your asset, if it gives you a weekly return, then you decide, well, how long do I want to keep getting this weekly return? That's a stupid question. How long do I want to keep collecting this money? Well, if I buy the asset for 13 grand and it's giving me $300 a week or 2% a week, that's over 100% at the end of the year. It would be just silly to get rid of it. But stocks go up, stocks go down. It will get to a point where it doesn't make sense to hold on to it. That's when it goes up. When it goes up over that 138, well, and it's not as attractive to hold on to it, that's the time to let it go. All right, next, let's do the next one. All right, next. Todd, how you doing, Todd? User agreed with me. Okay, Macho Alpha wants to take a look at SPY. Why the hell do you want to look at SPY? Okay, now the reason why I say it that way, because I've been doing this for quite a while. And for some strange reason, people have a tendency to not want to listen. Uh-oh. There it is right there. Okay. Oh, Berner wants me to sell him a course. I don't have a course to send you, brother. Sorry. All right, so we're going to put an SPY here. SPY. Now, Macho wants SPY. All right, so what we're looking at, Macho, okay? We're looking at dividends only, okay? Historical data and all the dividends that this has paid out. Now, SPY goes back over 100 years. We're only going to look at the last 20 because that's what I'm looking for. 20 years of consistent profits. That's what I'm looking for because that makes sense to me. Okay, number one, it's $672. I don't buy anything over $350. That's just me. Okay, you can do whatever you want, but me, I cap it off at $350. Doesn't make sense to put $672 in. So let's go all the way back to 2005, right here. Okay, March 18, 2005. The dividend was 46 cents. It is what it is. I mean, you can argue all you want. It's historical data. It's written down somewhere. 46. Okay, so what I'm looking for specifically is for these to get higher and higher and higher and higher and higher, because a dividend is a portion of the company's profits they give back to the investors. And that's who we are. We are the investors. We buy, we sell, we own a portion of the company. We're entitled to a portion of the profits. So, Macho, you ready for this? 2005, 46. 48, that's higher. 52, that's higher. 67, that's higher. Hey, it's pretty good so far. 67. 51, that's lower. 55, 57, 79, 55. That's twice it went down. Not up, went down. But hold on, because we're only at 2007, which means you got a lot further to go. Okay. Here's the 55. Okay, went down twice already. 65, 71, 77, 64. That's 3 times. 66, 69, 71, 56. That's 4 times. 51, that's 5 times. 50, that's 6 times. And we're only on 2009. We still got to go all the way to 2025. Trust me, it doesn't get any better. Okay, 2009. Okay. 50, 59, higher. 48, lower. That's 7 times. 53, 60, 65, 55. That's 8 times. 62, 62.5. That's 9 times. 77, 61. That's 10 times. And we're only on 2012. We're only at 2012, and this has already gone down 10 times. No, that's not what I consider consistent profitability. Consistent profitability would be 50, 59, 60, 65, 77, higher, higher, and higher. Not up, down, up, down. It goes down almost the same amount as it goes up. Why the hell am I doing that? But hold on. Hold on a second. Believe it or not, it actually gets worse. Now we're going to take a look at the summary page. Now the summary page will give you a good idea of what to expect from this thing. Okay? Now, Macho, I'm not 100% sure if you actually looked at the summary page, because if you did, you probably would have said, oh, hell no. Okay? The reason why is, look at this right here. The yield, 1.09%. So you're putting $673 per share into the SPY, the spiders, and it's paying 1.09% for the year. And you think that's good? I'm just saying no. Only because I want weekly cash flow. I'm not buying something and holding on to it till it shoots through the roof. That just doesn't work for me. Okay, I want cash flow on a weekly basis. I grew up in the 60s and 70s. Okay, we went to work at 8 in the morning. We got done at work at 4:30. And on Friday, we got paid. Monday, we did the whole thing over again. Well, that's the whole thing. That's the way the stock market works. It opens up at 9:30 and it closes at 4. Monday through Friday. That makes sense to me. Fufu wants to look at BKNG. What the hell is that? BKNG. BKNG. Booking Holdings. Am I seeing that right? Why do I even listen to you new people? Peyton, how you doing? NAK. NAK. Hell no. UNC. UNC. UNC has no options. That's a hell no. Amen, Kaylee. Thank you for that. Do it myself? Hell no. Hey, I don't blame you. Some people just don't want to do it. They rely on people like me. Okay, Fufu. I looked at BKNG. Hell no. Okay, I don't do anything over $300. Why am I looking at a $5,000 stock? Seriously. No. Can you explain what the delta and theta are? Yes, I can. Why do you want to know? You give me a good reason why you want to know, and I'll tell you what it is. Because, Alex, you've been here long enough to know you don't need to know those two. Alex, the theta is how? Yeah, I know what the theta is. It's a waste of time. Hey, LA Sound Waves, Hollywood. Tyler, thank you for that. All right. Joe, how you doing? NCSC, North Carolina, South Carolina Realtor, Angela Burgess. How are you? What are your thoughts on what the hell is that? GPUS. Hyperscale data. Oh, my gee. No. Walter. Oh, my God. Walter Bazillions. There's always somebody who wants to know about this thing. SoFi. All right, we'll take a look at SoFi, only because, I do what people ask me to do, even though I disagree with it hugely. Okay, and we will look at historical prices. Okay, right there, see? Historical prices, dividends only, because I want to see how profitable this company. I already know, but some of you guys don't know. All of them. Now, see, here's the interesting thing, Walter. Okay, Walter, the show is called Dividend Stock Talk. Dividend Stock Talk. Dividend Stock Talk. Yet you're asking me about a company that has no dividends whatsoever. Why the hell are we looking at something that has no dividends? The name of the show is Dividend Stock Talk. Dividend investing for weekly cash flow. SoFi has no dividends, so why are we looking at it? G Plus, I looked at that one. Hell no. Fufu, my bad. I asked before you said that. All right. Can you please look at GPUS? I did, and I said hell no. Nico, my buddy, can you tell me what BOT means when I try to make a covered call? It's when you buy something. Wait a minute, BOT, when you bought something. SEL is sell, BOT is bought. Hard no. All right, thank you there. What are your thoughts on TSLY? It's been paying me $70 every month. TSLY. I'll give you my thoughts in a second. Let's see all the dividends from TSLY. Okay, so here's my thoughts on TSLY. All right, who's that? Maycall. All right. Here's my thoughts on TSLY. The very first dividend they paid was January 2023. This company is not even 2 years old yet. Yeah, it's a little over 2 years old. Okay, so my question would be, why are you putting your money into a company that's only 2.5 years old? That's just one question. The other one, 199, that's the first, 199. 180, that's down. 180.6, that's down. 180.4, that's down. 165, that's down. 88, that's down. 160, that's up. 213, that's up. 166, that's down. 117, that's down. 115, that's down. It's like, never mind. I'm not even going to keep going in. Code Malik. QQQI. What's that? QQQL. QQQI. Same thing. QQQI. Okay. NASDAQ. High yield. Blah, 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 blah. All right. Here we go. Alt max. It goes. Oh, this is even better. Okay. QQQI. Very first dividend was February 21st, 2024. This thing's what? A year and a half old? Okay, let's look at the numbers. 59, 60. Well, that's a good start. 58. That's not so good. 61, 62, 61, back down. 64, 60, back down. 61, 61, 62. 62, 61, down, 58, down, 53, down, 63, 62, down. It goes down more times than it goes up. Terribly sorry. When I say consistency of profitability, okay, Coda Malik, when I say consistency of profitability, let's go all the way back to 2005. Okay. All right. Coda Malik. You see this company we're looking at this moment in time called GPC. 7 decades of increased profits. I'm going to show you what an increased profit's supposed to look like. 30, 31, 33, 36, 39, 40, 41, 45, 49, 53, 57, 61, 65, 67, 72, 76, 79, 81, 89, 95, $1, $1.03. Did you notice every single number was higher and higher and higher and higher and higher? This company has done that exact same thing for 7 decades. That's longer than I've been alive. 7 decades. QQQI, not even 2 years yet. No. So Aiden wants to take a look at Coca-Cola. Now, if you didn't know, Coca-Cola is a dividend king. That means they have over 5 decades, that's 50 years or more, of increased profits. They've been in business for 140 years. High, low, where was it, where is it? Down, up, down, up. Simple. 66.12, the 66 is going for 85. Well, that looks good. Let's see what it looks like. A year ago, 69.31. We bottomed out in the beginning of January at 60.61. The high of the year, 74.44, and that was in the middle of April. Well, from the middle of April, it drops a couple of weeks ago. Our last 30 days will look something like this. That's our last 30 days. High, low, where was it, where is it? Up, down, if you like Coca-Cola. The numbers, 66.12, the 66 is going for 85, so let's see that play out. So let's get rid of this. Let's change this to covered call right there. The 66 is right there. One contract at 66 at the market. Here's Johnny. Buy one Coca-Cola. 100, that's the weeklies. 17 October 25, that's next Friday. Not this Friday, next Friday. The $66 call option against the stock at the market to open. We did that. Profit, $6,500 investment. 68 bucks is the profit. It's costing 6,500 bucks. All right, well, let's find out what rate of return that is. 68 bucks divided by 65.32, grand total of 1.04%. Well, the company's over 140 years old. They're dividend king. Every year they make higher and higher and higher profits. Well, do you like Coca-Cola? It's a simple question. Are you willing to buy it at 66.12, whatever the hell it was, 66.12, and hold on to it and do a covered call every single week and get some kind of cash flow coming in? Oh, wow, we're at 10 o'clock already. All right, well, let's keep on going. What else do we have? Verizon dude from Iowa. People actually live there? People actually live in Iowa. Let's get rid of that. Get rid of this. All right. Next, Verizon. VZ. No. Okay, the reason I'm saying no to Verizon, okay, down, sideways, drop like a rock, and it's still dropping. However, I am going to put Verizon down for next week, because today's Wednesday. We got 2 days left, okay? Okay, so I'm putting this down for next week because the bottom for Verizon, look at this, 45.50, now we're at 41. Okay, that's a 10% drop from here to here is 10%. Now we're looking for a new bottom. Okay, today, for all we know, today could be the bottom. Tomorrow could be higher. I want 2 days to the upside, and on the third day, I'll jump in. So if tomorrow's higher, that's Thursday. Doesn't mean anything to me. That's only one day. Friday, if Friday's an up day, that's 2 days to the upside. That means it's perfect opportunity to jump in on Monday if Monday's the third day to the upside. For me, that's my rule. You got to figure out your own rule. My rule is 30-day top, 30-day bottom, 2 days to the upside. On the third day up, I will jump in. That's for me. I've never in my whole trading career ever picked a bottom or ever sold at a top. I'm always in the middle because I'm not greedy. Okay, bears make money. Bulls make money. Pigs get slaughtered. Nico, I put $4,000 in my account and bought a stock for $1,600. Then tried to make a covered call, and it says, I have no idea what it says. Nick, you later. How are you doing today? That's a Jim Cramer phrase. I have no idea what that means. I don't have enough money. Well, why the hell are you buying a stock for $1,600 if you're only putting $4,000? Is it a good time to sell my Oracle shares? Okay, Ashwin, I have no idea who you are. Okay, number one. Number two, I have no idea what you're trying to do. I don't give advice. I don't give tips. Okay, I'm just here entertaining, singing and dancing. Yay! Okay, and just observing. You guys give me a stock symbol, I'll put it in, and I'll just make observations. That's all I'm doing. Observations, singing and dancing and entertaining. Old Dominion Freight Line. Is that D? I think that's D, isn't it? D, Dominion. I'm going to say no to Dominion, only because the high of the year was yesterday. I don't ever buy at the high of the year. And secondly, it's a monthly optional stock. October, November, January. Yeah, I don't do monthlies. The numbers just don't work for me. Aiden, AMD. Hold that thought. AMD. Hell no. Didn't we just say don't do this? Don't show me something's at the high of the year. It makes no sense for us to waste our time looking at something that we cannot buy and take advantage of. Hell no. ODTI. No, ODFI. What the hell is that? Code, thank you for that. ODF. What the heck is ODFI? All right, FL. Old Dominion Freight Line. That's still a no. Okay? October, November, January, April, May. No, I don't do monthlies. The numbers just don't work. It's not worth my time. Sorry. ORLY. What the hell is that? ORLY. O'Reilly. Code, thank you. But did you not hear what I said about monthlies? October, November, December, February. These are months of the year. If I get 1 or 2%, that's 12 to 24% a year. That doesn't. Ty Junior, thank you, Ty. Okay, it does nothing for me. I don't trade monthlies. The numbers just don't work, and it's too difficult to figure out where they're going to be in 30 days. Okay? Joey Fritz, I'm trying to get into trading. I have a steady job, great pay, but want more. How much do I need? Okay, Joe, I'm going to tell you the same thing I tell everyone else. Number one, don't put any money into the stock market until you practice with paper trading. It's a waste of time. Okay, all you're doing is you're actually doing. Here's an interesting thing, Joey. You ready for this? Right. Okay. Real account, paper trading account. Now, the reason why I paper trade after 30 years, I still come up with interesting ideas, and I paper trade it before I put real money into it. Okay? So take your time, paper trade for a while. Now, if you paper trade for a while, okay, you will know when it's time for you to put real money into it. Because you cannot tell the difference between a live account and a paper trading account. Because the numbers are all the same, the platform's the exact same, you buy, you sell at the exact same prices. The only difference is one's real, one's not. It's kind of like Monopoly. You know, 4 greenhouses, 1 red hotel, go round and round and round, collect $200, don't pass go, blah, blah, blah. Aiden, you got that one. All right. All right. I bought it yesterday, made 10% profit. All right. Okay, Niculated, we looked at Dell earlier. Chris, I'm not even going to look at VLY. Never even heard of it. I bought my first stocks yesterday and at 13% profit. Cool. Joby, where do I start paper trading? I use Thinkorswim. It's through Charles Schwab. They will let you use all their stuff for free for a while, and then eventually they want you to trade with them. Now, so I wrote I was going to say I wrote a book 14, 15 years ago on choosing the right trading platform for your style of trading. That was a long time ago. Okay? That was nice. Thank you for that. I forget what that was. All right, where do I start? Phil, when you only look at dividends going up, you're not looking at how they're paying the dividends. Are they funding it with profits or free cash flow or debt? Interesting question there, Phil. Alex, why has poor dividends, but everything else looks good? Do we even ever bend the rules? I do once in a while. Chris, you've never heard of Valley National Bank. Have you ever heard of Angelo's Supermarket? See, Valley National Bank might be right around the corner from you. Where I went to school, Rockland Credit Union was right around the corner. Okay? Bridgewater State Credit Union was right with 2 towns over. Okay, so Valley National Bank, well, there's no valleys where I grew up. So no, there would be no Valley National Bank. Okay, so let me get back to Mr. Phil. Mr. Phil, I'm going to give you a quick little history lesson, Mr. Phil. Are you ready? In the late 1500s, this is a long time ago, Mr. Phil, there was a group of businessmen got together and they decided they wanted to create the biggest, baddest company the world has ever seen. In order to do this, they needed a whole bunch of money. The only way they can come up with the amount of money they needed was to go, you ready for this, Phil? Door to door, to the peasants, to the working class people. And this is what they said to them. I'm going to, roughly. Invest your money with our company. We will share of the profits with you. A dividend was born in 1602 when the very first dividend stock was created. Okay, it was VOC, just in case you wanted to know, the Dutch East India Shipping Company. They ran for 198 years, and they averaged a dividend payment of 18% for 198 years. Average. That was the average over 198 years. So the dividend is a portion of the company's profits they give back to the investors. That's how it was originally intended and how it was originally created. What they're doing nowadays is beyond me. If the dividend increases, it's a portion of the profits given back to the investors. So you have a valid question there. It is a valid question. Okay? The companies I look at specifically have been in business for at least 20 to 25 years. I prefer the ones that are 50 to 100 years old because they've proven their track record. Coca-Cola has been profitable for over 60 years. That's 6 decades. Okay, GPC, Genuine Parts Corporation, they have increased their profits for 7 decades. So yeah, you might be right. Is it cash flow or is it debt? Nowadays, okay, when it first originated, it was a portion of the company's profits that they gave back to the investors. That's what a dividend was many years ago. PUBG Mobile. Good morning to you. Are you teaching how to trade options? Absolutely. 1,500 trades and 4 losses. Ain't no way. Okay, Tukey, thank you very much. I like the positivity. Thank you. Okay, when I first started Tukey, I did 125 trades in a row before I got my first loss. Okay, what I'm doing is simple, safe, predictable. Now, I go so safe, it is absolutely pitiful how safe I go with my trades. I'm not looking for big, huge gains. I'm looking for a very small 1%. It's very small. 1% is all I'm looking for. It's very easy to jump in when a stock is going up and jump out after I get my profit. Why are you seeing it's unbelievable? Well, I can't help you out with that. But if you want, there. Okay, if you want, you go to the website. Okay, I have posted all my trades all last year and all this year. Okay, on we go. You can just grab any one of these things. Let's look, what are we looking at? Right here, week number 20, May 12th. All right, here they are right here. All time stamped. Okay, that's what the trade was. That's the timestamp. Okay, what kind of a trade it was, how many contracts it was, what stock it was, what's the actual contract dates, what's the strike prices, what are the numbers, and what are the profits. Okay, go ahead, take a look at every single one. You will notice there are 4 losses. That's it. Okay, all the profits right there. Go look for yourself. I'm not going to sit here and say, hey, you're wrong, because I really don't want to deal with that scenario. What are we doing? Come on. All right, I'm almost done. I'm just, that one can turn off. Hardly anybody there anyway. All right. All right, let's get out of that. But if you want to look, you're more than welcome to look. All right, here's something else for you, just for you. You guys can look too. Why not? Let's go to 2024. All the trades from 2020. I have more losses last year. I think like 8 losses last year. Is all the trades from last year. Okay? All my trades for last year. But what's under the trades from last year? Well, what is this? Look at this. This is my very first blog post. Because when I started, the very first one was a blog post because they didn't have video back in 2011. Okay? Starting date, August 31st, 2011. Okay? Here's week 26, July 6th, 2013. There was a huge drop in the last few weeks. We took a break from trading and waited for the dust to settle. We didn't take any losses as this year we're looking for a no-loss approach. We have dropped down to only 20% return so far on week number 26. We had a 20% return on week number 26. So far at halfway point for the year, our weekly averages dropped below 1% and our monthly is only 3.3. Even the big drawdown, blah, 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 blah. Okay, that was my first blog post. And I did this for years. Okay, and then in 2013, we did videos, which were basically PowerPoint presentations and a capture. It was crappy, but it's still what it is. Okay, and doesn't this look familiar? The 1-year chart, the 90-day chart, the 30-day chart. And what did I write? Moving sideways all year, last 90 days, looking at the channel close to the year's high. Last 30, still that channel looking for the dividend to make the push upwards. That was March 23, 2013. So I've been doing this for a while, and I appreciate you, fact-checking me if you want. Okay, now I don't have this website anymore, only because it just didn't. Not many people actually visited it. Oh, check out this one. Week 868, December 22nd, 2012. Week 51 for the year, 83.7% running total. 157 with our weekly average 2.3. That was back in 2012. Yes, I've been doing this for a while. So if you don't agree with me, fine. You don't have to. I got nothing to prove to anyone. I'm just being kind and courteous to show you what I've been doing just in case some of you want to do it. When you look at dividends going up, how they pay them. Thank you, Phil. We already did that question. Next. Are they fun? Okay, we already got that one. Okay, got that one too. WMT, that's Wally World. Alex, why not? Wally World. WMT. Interesting. Let's check it out. Wally World. High, low. Where was it? Where is it? Up, down, up, 102.90. The 103 is going for 143. That's more than 1%. We all know who Walmart is. Is it a company you want to buy and hold on to? That we don't know. Well, let's find out. The low of the year was a year ago, and that was 79.07. Okay, she shoots up, pulls back, shoots up. The high was just within the last 30 days, right there. Here we go. The high of the year, right there. Okay, the low of the 30-day period there, shoots up, down, up, down. Now she's going up, or is she? Look what happened today. We got 1, 2, 3 days to the upside, and today was a down day. Lower high and a lower low, and she actually settled at 102.90. So the question is, does it look good enough to jump into? I can't answer that for you. Okay, me, I'm going to say no, only because I don't know what this is right here. That makes me a little queasy. Okay, 30-day bottom, 1 day, 2 day. Now, normally I would have jumped into this yesterday, but it wasn't on my list to look at yesterday because yesterday was Tuesday and I had all my investments already done on Monday. So no matter how wonderful it looked on Tuesday, all my money was already tied up in everything else. Oh, why not? Hacked. Thanks for the live. Do you think PayPal is a good spot to take some calls? Now, Hacked, I have no idea who you are, so giving you advice on PayPal, I can't do that. I could do that, but I'm not going to because I don't do PayPal because it doesn't have dividends, which means without the dividend, I don't know how it moves predictably. Because I like dividend stocks because they're predictable. They do basically the same thing every 90 days. Every 90 days, they pay a dividend. And just before the dividend, usually the stock goes up. Usually. That doesn't mean it's going to. It just usually it goes up. That gives me a little bit of an edge. Now, PayPal doesn't have dividends. So how do I tell when it moves predictably? Okay? I like predictably. I like consistently. Okay? I like the Lee family. Profitably, consistently, safely, so on and so forth. Okay, so I can't answer the question about PayPal for you. All I know, they don't have dividends. All right. Cincinnati, how you doing today? If the stock goes down on you, how far is the strike you choose? Oh, strike you choose when you roll the covered call. It's always going to be dependent upon the stock itself. Because each stock has a, okay, this is something most people probably won't teach you or show you. Hold that for a second. They probably won't teach you or show you, but I'm going to show you. Okay? Now, here's the chart. You might not be able to see this here on your, because if you're on an iPhone, you probably won't see it. Okay? But I'm going to point it out and show you where it is. So if you have the opportunity or the desire to go to YouTube and pull it up on your computer, your screen, and zoom into it. Now, see, this is a lovely, what do they call this? They call this a vibe board, and I should be able to do stuff, but I have no idea how to use this board. So apparently someone's going to come and show me how to use this thing so I can zoom into stuff. That's the reason I got it in the first place, so I can zoom in. So I'm going to show you. Most people don't tell you this. You ready? Now, when you put your ticker symbol in here, this information up here will give you all kinds of neat little data, things you can take a look at. Right underneath, right here, it gives you the, wherever you have your cursor, it will give you the date, the open, the high, the low, the close, and R. R, right there. R means range. How much did the stock move from the high of the day to the low of the day? What is that movement? Okay, so let's look at a few of them. Right there, 9.8. That's a month ago, 9.8. Okay, so the range, $1.94. The difference between the high and the low was $1.98. The very next day, on the 9th, the range was only 94 cents. The next day, $2.06, $2.50, $1.61. So judging on the movement, how much does it move on an average? That will tell me where do I think the stock is going next, because it already gives me the numbers. All I have to do is just add them up and say, all right, if it normally moves $1.50 and I am here now, where do I think it's going to go in 5 days? Because I'm always doing Monday to Friday. That's it. I don't do monthlies because monthlies is 30 days. I don't want to try to figure out 30 days. 5 days is hard enough because it looks as if it should go up because you got your high way up here. It looks as it should keep going up. But it's not guaranteed because today was a pullback day. So I don't know. So anytime a stock goes against me, I'm always looking at where did I buy it? Okay, what price did I buy it at? What did I sell? What's it at now? What does it look like it's doing? And what kind of movement does it usually make? All the information is there. You just got to know how to put this together with this and this. And what does it mean? It's simple. What does it mean? Okay, so to give you the answer to that question, each stock is different. I'll take a look at what did I buy it for? What strike price did I sell? What did I collect? What's it at now? Where's it going? What should I do? It's just one step at a time. It's kind of like riding a car. Remember the first time you jumped in a car to try to drive? Okay, adjust this mirror, adjust that mirror, adjust this mirror, get the seat right, get the seat belt on. Okay, where's the key? Where's this? Where's the directional signal? And it takes you about 15 minutes just to get ready to get started when you're 15 or 16. Nowadays, if I threw you the keys, you probably just jump in and go because you've done it over and over again. This here is a whole new language, a whole new world. When you first started playing Monopoly, you didn't know the rules. Okay? When you first got out of high school and you went to college, you didn't know anything. This is the same thing. You're learning something new, something different. It's going to take time to understand the language, to understand the terminology, and to understand what. So that's the reason I came up with the strategy for my 9-year-old daughter. Simple, safe, predictable, consistent, and no way for her to lose. It was specifically for her. And I haven't done this in a while, so let me show you the little princess for those of you who don't know. Oh, no, it's here already. Oh, no, Mr. Beal. There. This is on my what do you call this? Social media. Instagram, Twitter, books by James. Yes, James has written 14 books. Podcast, TikTok, Facebook, LinkedIn, Patreon. Okay, so we want to go to YouTube so I can introduce you to the little princess. She hates that, by the way. I'm not a princess. Stop calling me that. Yeah, whatever. All right, oldest videos. And here she is. Okay, sit tight.
Hi, I'm Jake, and as you being part of my MetLife cycle thinking, which my dad doesn't like me calling it that, but I do. Being part of
She
that,
almost looks like me.
Weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you.
Okay, that's me. That was like 15 years ago. Look at all the hair that I had.
What does that mean? That means every single day you can buy a different stock every single day.
All right, it's not that bad for 62. That's my favorite part.
I think you just.
That is my favorite part. So that's my 9-year-old daughter when she was 11. Okay, so we had been trading for 2 years at this point. So let's get out of that because you don't need to see that. But that's who it was created for. It was created for my 9-year-old daughter when she said, "Daddy, can you teach me?" I said, "Okay, fine." So the 5 rules. Never buy something you don't want to hold on to. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and then make sure the numbers work. That's all 5 rules. It's really not that difficult. People, adults, have a tendency to make it more complicated than it really needs to be. Okay, we're going to look at a couple more, then I'm going to sit and answer questions because we got a whole bunch of questions to answer. Drake definitely used to be a teacher. Nope, never was a teacher. I always wanted to be a teacher. Seriously, I did. I wanted to be a teacher. But here's the thing. I had no desire to go to school for seven years to be unappreciated. I can stay at home and be unappreciated. Underpaid and unappreciated. Yeah, I can stay home and do that. All right, this camera died on me. Here we go. All right. 90 minutes. Don't forget to take a break. Okay. After you buy a contract, 1,600, why do you need money to sell? Okay, Nico. After you buy a contract. Okay, Nico, I don't buy contracts. I sell them. Okay? What else do we have? That's it. We're done with questions over there. Yay! So now, let's go to YouTube and TikTok channel number 1. That was TikTok channel number 2. All right, what do we have here? Sir, do you have a Discord? Yes, I do, but it's part of the paid service, so it's not free to everyone. Sorry. Lee, how you doing? Okay, thank you there. Who thinks the market's about to tank? Of course it's going to tank. That's the silliest thing I've ever heard. It always does. Every decade, the stock market tanks. It goes up, it goes down, and then it goes up, and then it goes down. But if you take a look at the last 120 years, you will notice that it's consistently going towards the upside on an average of 10% per year. So yeah, it goes up, it corrects. It goes up, you can call it whatever you want. It goes up, it comes back. It goes up, it comes back. Yeah, it crashes every decade. All righty? Metro, ridiculous. What stocks should I buy? I don't tell people what to buy. Can I know 9 platforms names, please? Oh boy. Okay. 2 TikTok channels, 3 YouTube channels, Twitter, Instagram, Zoom, Rumble, LinkedIn, Twitch, and I think 1 or 2 Facebooks. I don't know why you want to know that. Why are you in pajamas? What's wrong with being in pajamas at 10:30 at night? Why aren't you in pajamas? Think about it. It's 10:30 at night. Why would I not be in pajamas? And I'm not in pajamas. This is a t-shirt. I got like 10 of these things. All right, let's keep on going. What do we have over here? What we have here is a failure to communicate. Wow, I missed a lot of these questions, didn't I? All right, wow. Okay. Lightning, T8, how you doing? Ya mama. Notice how he pronounces not. I'm not quite sure what that means. Not yet, I'm learning. I have no idea what that means. What's your best advice for a new trader? Education. Take your time. Don't be in a hurry. Stock market's been around for 400 years. It ain't going anywhere. Okay, Lightning, you're not learning anything? Not yet, I'm learning. Okay. Alstair, how you doing? San Jose, que pasa, amigo? Leo, Vic, Fiona. I like that name, Fiona. Nate, how you doing, Nate? Christina, Gen X. Gotta love the Gen Xers. Do you always sell covered calls open to open? I'm not 100% sure what that means, open to open. Oh, to open means you're buying the stock to open a contract. You're selling the option to open a contract. So anytime you buy something, you have to open a contract. Okay? Anytime you sell something, you got to open the contract. You have to buy and then you have to sell. You're opening a contract, you're closing the contract. Buy to open, sell to close. Sell to open, buy to close. Okay, so it's one of those terminology. All right, what do you got? Jack Pat, what's going on? Phil, only if the company doesn't have other investment opportunities that offer higher returns. But also, what's the underlying return on SPY? 1.4%. We looked at that earlier. SPY isn't really better for long-term investing. No, it isn't. Thank you for your knowledge. You're welcome, Lightning. NYC grading. I have no idea what that means. Grading? NYC grading? Well, VOO. I'm not even going to bother with that one. It's like 10:30. Tap, team. All right, Cardi Tavali. How you doing, Cardi Tavali? Yo, mama. I'll tap when he addresses our screen. Yeah, mama, okay. What's your best advice? We did that one already. Okay, Daniel, you're awesome. Your teaching is another level. Thank you very much. Jack Pat could eat no fat. His wife could eat no lean. So between the two of them, they licked the planet. That was a nursery rhyme. Holy cow, from the 60s. Buru. Yeah, no. AEP. What the heck is AEP? I've done that one before. AEP. Hell no. Not even going to bother acknowledging that one. Johnny got bull calls today, up 60% already. Cool beans, Johnny. Ty Jr., thank you there, Mr. Ty Jr. There you go again, Mr. Cayley, thank you. Jay White, A-I-R-E. What the heck is that? A-I-R-E. Realfa Tech Corporation. Hell no. Okay, Jay White, no. Okay, weekly options only. Stocks that have 2 decades of profitability, which means it can't be in the pennies. You're not looking if you don't know it. You're not looking if you don't know it. All right, Mr. Cayley, I'm going to agree with you. I don't know it because I have no idea what you're talking about. Lando, B-Y-N-D. What is that? B-Y-N-D, B-Y-N-D. Beyond, oh, hell no. I'm just doing that on, hell no, on principle. Anybody that makes meat in a laboratory, hell no. That's just against everything I stand for. Okay, my very first job was on a farm. Okay, and you want me to take a look at something that fabricates meat in a laboratory? Oh, hell no. Verizon, we already did that one. Remember, you said it, that you're not going to look a bit if it didn't know about the company. Oh, yeah. I mean, think about it. It doesn't make sense, Kaylee, does it? I mean, I've been doing this long enough. Somebody gives me Beyond Meat is delicious. Ugh. It just sounds gross. Okay, it's like, no. All right, Alex. Okay, my first job was on a farm. The first time I ever had real fresh food, fresh, because it's growing right there. You walk out in the field, you grab a tomato and you bite into it. You can't get any fresher than that. And then one day, it was a Saturday, I remember it clearly. Okay, old man Simmons went into the chicken coop and he's walking out of the chicken coop with a chicken in its hand. The chicken's going out. Guess what we had for lunch? Chicken. It was the best chicken I've ever had in my life. It was fresh. It was not even a couple of hours old. So yeah, Beyond, no, sorry. Nothing that comes out of a factory that says meat. Ugh. All righty. Richard Jones, AJ Doobie, Cool Beans, Carlos Guzman. What makes some stocks dividend stocks and others not? New here. Okay. Guzman, basically, there's 10,570 different companies in the stock market as of this week. Every week they add more. So we're at 10,500. Okay, so half of those companies are what is called dividend stock companies or income stocks. That means they give you money. Okay, the other ones are called growth stocks. They take all the money, all the profit, they put it back into the company, and you buy it and you hold it for years upon years upon years, and it slowly grows. Okay, so there's the big difference between the two. And it's almost a 50-50 split. You know, half the companies in the stock market pay dividends, the other half don't. Mold Factory, how you doing today? Fonzie, Fonzie, Kraft Heinz, KFC. No, that ain't it. KHC, sorry, KHC. I was wrong there for a second, KHC. Ooh, now, don't get me wrong. I'm going to say no to Kraft Heinz this week because look at this. A year ago, we're up at 36. Now, we're down at 25. It's only a $9 drop, which is, it's not huge, but still. Okay, we're dropping like a rock. Okay, today is the new bottom of the year. Now, we're talking about a dividend king, a company that's over 100 years old. It's over 100 years old, number one. Number two, where are we? Not that, come on. There it is. Got to go live over here. It turned off for a second, so I got to turn it back on. And there we go. All right. Kraft Heinz. So Fonzie, it's a new 30, it's a new bottom of the year today. So I'm putting this down for next week because it is a dividend king. It is over 100 years old. And it definitely looks like it should bounce right off that bottom. KHC. All righty. Frodo. How you doing, Frodo? Thank you for that, Frodo. Mold Factory. Which boss interested in molds? Okay. Cato Snow Cone, UPS. Okay, interesting. Okay, the high of the year, what's that, 145? The bottom of the year, 83. Look at the last month, the last 60 days. Look at that movement. Up, down, up, down. So it's actually coming down at the moment, so it doesn't really look that appealing. Okay? The high was yesterday, and today it's down a little bit. So looks like we missed out on that opportunity for UPS. SPG. SPG. What the heck is that? Simon Putty Group. Hell no. Come on, Walter. THG. What the heck is that? Hanover Insurance Group. Hell no. UPS long play. Okay, so one Cato. Long play for me is 2 weeks. Walter is tripping. STE. What the heck is STE, Mr. Steve? It's a hell no is what it is. Okay, Austin. Okay, I don't do monthlies. The numbers just don't work for me. So it's going to be a no. STE, no. Rugworks. Okay. Hello, CRM. What the heck is CRM? CRM. Interesting. Okay, so the high of the year is like 370. Okay, way up there, 370. Now she's dropped down to 220. Up, back down again. Let's find it. What's going on the last 30 days? Your 30-day high at 258. We dropped down to 233. Jumped up, pulled back down again. Not this week, but maybe next week if you like Salesforce. No, Salesforce is not old. It hasn't been around long enough. Yep, I got that one. UPS is a good one. Yeah, I saw that one. FAST, Fast Terminal. No, I don't do monthlies. Kind-hearted, how are you? What are your top 3 favorite dividend stocks? That would be Macy's, Nordstrom's, and Kohl's this year. Jay White, how you doing? Striker, what's going on? Pompeii Surgical. What is your number one go-to play at the moment? A covered call on a good quality company. Elke. Oh, Elke likes GPC. I don't blame you. I like it too. COOP, what the heck is that? Mr. Cooper Group, hell no. Perfect Collins, London, Detroit. Okay. Thoughts on Coca-Cola? Joseph, we did Coca-Cola a little while ago. So much knowledge. You haven't even gotten half of it, brother. Not even half, AJ. What are your thoughts on SPG? We just did that a couple seconds ago. Phil, they're a monthly dividend. This guy is useless. All right, Mr. Phil. Quarterly or annually dividends is see his point. Okay, Phil, you're still not... Phil, I'm trying to look at something interesting that you come up with. So I'm looking at all the stuff you said, Phil, and nothing is really tickling my fancy. Okay? I don't see what you're saying here, Phil, because whatever you're saying, some of it's not... They're monthly dividends. This guy is useless. Thank you, Phil. Dude, why so aggregated? Aggregated? Why so aggregated? I'm not quite sure what that means. Quarterly or annual dividends is. Okay. Phil, you're under the impression that I'm actually looking to collect the dividends. I never said that I was. Why so aggregated? I have no idea. THG, Jack, THG. Hell no. Coca-Cola, Joseph, we did Coca-Cola already. Where are you clicking to get dividend history? Tenacious. Oh, tenacious. Oh, dividend history, you're getting that on Yahoo Finance. Okay, Yahoo Finance. Okay. When you go onto Yahoo Finance, historical data right there. When you hit historical data, you get to choose how much you want to look at and what you want to look at. Okay, I want to look at the dividends because if the dividend is increasing, the company is being profitable. If the dividend is decreasing, that means they're losing money. It's actually really that simple. Sterling sauce, 67. What does 67 mean? Chris, VLY. I'm not even going to bother with VLY. I have no idea who they are. And Chris, you keep giving me crap to look at. Yeah, but only 3% dividend. So Pompeii Surgical. Why are you assuming that I'm looking for the dividend? I'm not. I don't care about. See, the only thing I want to know about the dividend, okay? Get rid of this. Okay, who came up with that one? Pompeii Surgical. Okay, Pompeii Surgical. You ready? This here behind me is what is called an EX dividend calendar. It tells me every single stock that pays a dividend and when. Why do you think I use a dividend stock calendar? Number one, I can break down the companies I'm looking at right there. Each one of these little green dots are companies that have consistently increased their profits for 25 years. That's a quarter of a century. I know when they actually have their dividend. So why is that important? Just before the dividend is paid, Caterpillar, the 20th of October. What is that? 2 weeks away? Caterpillar, right there. Just before the dividend is paid, the stock has a tendency to increase in value. So if I know ahead of time the dividend is coming, I can buy the stock 1 week, 2 weeks, 3 weeks before the dividend to take advantage of the increase coming into the dividend play. Now, PNR will pay a dividend once every 90 days or once per quarter or 4 times a year. So 4 times a year, I look at PNR, okay, 2 weeks before on a Monday. If everything looks good, I will buy it on a Monday, sell a covered call, pick up 1% here. I'd like to be out here. If not, I'll pick up another 1% here. I'd like to be out here. If not, I will pick up another 1% here and collect the dividend. And I will do that every single week to have weekly cash flow coming in. I'm going to say it really slow to see if you understand this. I honestly don't care about the dividend yield. I have 2 priorities and only 2. Consistency of profitability. Is the company's leaders doing their job correctly? If they are, the company gets more profitable as the years go by. I don't care about the dividend, only to tell me when to buy the stock. If the stock dividend is here on the 24th, I want to buy it on the 6th or the 29th, depending on what the chart is telling me. Because stocks only do 2 things. They go up and they go down. They go up until they are done going up. And then they go down until they are done going down. You could take a look at every single stock you can possibly imagine. They never, ever, ever, ever skip a day or two. They go up, they go down, they go up, they go down. That's it, that's all. I don't care about the dividend. I don't care about the stock price. I care about, is the company consistently profitable? I'm going to jump in. I'm going to get my 1%. Because the funny thing, 1% of $10 is 1%. 1% of $100 is 1%. So whether I buy sell one contract or sell 100 contracts, 1% is 1%. So if I have $100,000 in my account, 1% a week is $1,000 a week. I honestly could care less about the stock price, and I could care less about the dividend. My concern, I'll repeat myself, consistency of profitability and preservation of my capital. Weekly options. I forgot the weekly options. Yeah. Consistency of profitability, weekly options. That's it. Okay. Whatever the stock price is, I'm going to jump in, I'm going to jump out as long as it's going in the right direction. Okay. Follow the trend. If the trend is up, great. If the trend is down, well, wait till it stops and turns around. There's always a way to get in and get out. I'm only looking for 1%. 1% should be relatively easy. And I do not look at the dividend yield. I could care less. Is the company profitable? Great. How many years consistently have they been profitable? That's how I choose what I invest in. Now, I don't tell anybody what to do. I'm doing this here, this for my children and my grandchildren. I'm not doing it for you guys. Okay? At one point, I'm not going to be here anymore. So my children, my grandchildren will have this to go by and say, hey, what did Papa G do? He said this. Well, let's take a look. All right, let me see what else we got for questions. You can let them know. Okay, I need that set up. Thank you, Mr. Cayley. Austin, in your opinion, what is the answer to the dividend puzzle? Well, first of all, you got to let me know what the dividend puzzle is so I can take a look at it and I can maybe give you my answer. Ron Burgundy. What if the stock goes down? Do you sell the next call at a lower price? Ron Burgundy, it's going to be similar to what you just said. Number one, I always ask myself the exact same things over and over again. What did I buy it for? What did I sell? Where's it at now? Where's it going? What is the best, safest, and profitable trade should I do next? Austin, why company paid dividends instead of repurchasing shares? Well, Austin, it's a decision. Because here's the thing. When you make an agreement with an investor, okay? So if you're going to invest in my company, right? And I say, all right, great. I'll give you a 20% return. Guaranteed every year. Now, what if I said, all right, you know what? I'm not going to give you your 20% return. I'm going to go buy some of my shares back. That's not congruent, now is it? A dividend stock company agrees to give the investors a portion of the profits, known as a dividend. Dividends are 2x taxed, whereas repurchasing shares do not. That is the dividend puzzle. Okay, so Austin, I'm assuming you're in that group of people that likes to pay taxes. I'm in the opposite group. I don't like to pay taxes, so I don't. Legally. I'm not telling anyone to break the law, okay? Results in the same net impact to share price. Yeah, I get it. But here's the thing. Is the company a dividend paying stock or is it a capital growth stock? Capital growth stock companies take their profits, they put it into the company for capital growth. Okay, a dividend stock, they pay the shareholders first. What do you do when a stock goes down? Do you sell? Oh wait, I always sell. Everything I have, I sell something. I'm in an opposite group of taxes. That is why repurchasing are better for investors. It depends on what kind of investor you are, Austin. Okay, and it really depends on where you get your news from and who you listen to. Okay, so my trading, I trade in a corporate account, which means it's taxed at a corporate level. However, My corporation is in a state where there are no corporate taxes. That's a good thing. Then me personally, nothing's in my personal name, so I don't make any money in the way of looking at it tax-wise. But if I was, I opted out of the IRS crap years ago. You can do the same thing if you want. You say, you know what? I don't want to pay IRS anymore because there's no law that says you have to. It's strictly voluntary. But you didn't hear that from me. Let's keep on going. Tiffany Bell, how are you today? Eli Roll, what's going on? Chad Kane. Jack Pat, thank you there, Jack. Star Fox, we got 6 minutes left. See how many we get. James Robertson, what's the best stock growth dividend? Okay, that's two totally different things. Austin, the dividend puzzle is a financial theory question since repurchasing is in excess cash are more, benefit. Yeah, I get that part. I do. Okay, but here's the thing. It all depends on what it is you want. Do you want to collect dividends, or would you prefer the cash to be reinvested back into the company so the stock grows? Okay, I'm the latter. I want cash flow. I can honestly care less. GLW pays 1.38% quarterly equals 5% annually. Okay, lovely. Not quite sure what that has to do with what we're doing. I got to change plugs. There we go. Okay, so let me get this one. Okay, so James Robertson. Okay, what is the best dividend growth stock? I'm not quite sure. I can't get the question. Austin, you can sell stock from repurchasing to self-create a dividend, which is only taxed once. Dividends are taxed 2 times, corporate level and individual level. Okay. If your corporation pays corporate taxes. But remember this, Austin, profits are offset by losses. So let's say, hypothetically speaking, Austin, the corporate officers get together and say, you know what? We need to do this, this, and this, and we need to buy a private jet in order for us to get back and forth. Okay? Losses of the corporation can offset any profits. And if the corporation keeps buying things to make life easier for the corporate officers, which is a tax deduction, and the company actually makes no money, then I'm not paying any taxes on all those gains that you're talking about. Okay, you're talking about something that's taking us away from the topic that we're looking at. Okay? Yeah, I get that, Austin. Public companies pay corporate taxes on the profits. If the company is not profitable, which means, okay, the corporation had to buy a new jet, had to buy a whole new fleet of cars, and we had our corporate office meeting in Geneva. All that is a tax write-off, which is deducted from the profits. And if you deduct it properly, you have no income in the corporate level, which means there are no taxes at the corporate level. We can play this game all night long. Okay, I prefer just to talk about stocks and not talk about that kind of stuff, because you're going someplace where most people don't want to go down. James Robinson, dividend. Okay, I hear what you're saying, James Robinson. Okay, but I don't know anything about you, so I can't say what is the best stock for you, because we're all different. Joe Smith, I'm insulted by that, but thank you. But divs are paid after private jet expenses. Nah, okay. However you want to look at it. DJ, what do you think for tomorrow? Flat or down day? DJ, I really don't pay attention to that, believe it or not. Okay? It's strange as it may seem. Okay? Say, I already bought all my stuff for Monday. So all I'm doing tomorrow is I'm just checking. What did I buy it for? What did I sell? What's it now? Should I do something today, or should I wait until Friday? Tiffany Bell, you're from Iowa. Yay! Crystal, how are you? Smalls, how you doing? Kind-hearted, thank you. I looked a little more closely. Honestly, what I mentioned, not always the best. I have no idea what that means, but okay. THQ, you're welcome. What do you buy? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. When are you going to post your social media again? It's been a while. My social media? Oh, you mean like TikTok, YouTube? Hold on a second. Need the glasses for this. Either that, I gotta get a bigger screen. Okay, it's the10MinuteTrader.com. Go to here, go to there, and there it is right there. Okay, that's my social media. Instagram, Twitter, Books by James, YouTube, blah, 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 blah. Okay. Alrighty. THQ. Jack, what is THQ? No, we're not doing that anymore. It's 11 o'clock. So we're just going to answer questions. TEU have paid and free bit it works wanted to be. That makes no sense to me. I'm terribly sorry. Austin, wasn't trying to argue. I value business for work and I like to hear people's opinions on controversial concepts, which the only reason I kept digging deeper was just curious, hear more perspective. I hear you. But remember, Austin, okay, when it comes to taxes, government taxes, U.S. government taxes are mandatory, okay? IRS taxes are voluntary. Man, I'm loving this strategy. Thank you, Alex. Okay, you hear that, Austin? IRS, or federal income taxes, paid to the IRS, which is a branch of the Federal Reserve, which is not a part of the federal government. Neither one of those are. Okay, Federal Reserve, not part of the federal government. IRS, not part of the federal government. Okay? Then it's strictly voluntary. And you don't have to do it if you don't want to, because there's no law that says that you do. And you didn't hear that from me, because I have no idea what you're talking about. Righty. BNS, we'll take a look at tomorrow. UPS tomorrow. I enjoy you. I learned so much the past hour. Thank you there, Mr. Peter. Thank you for your interaction. C.A. Smith, check with me tomorrow. Bank of America. Kevo, yeah, IRS is always watching. Iran, we looked at it yesterday. John, it was a no yesterday, and I'm pretty sure if it was a no yesterday, it's probably going to be a no today. Cato, we looked at UPS earlier today. Lightning, I love Target, I do, but you got to be leery of Target. They have what's called black swans. They show up every 90 days, sometimes. Oh, hell no. Thank you there, Mr. Cayley. That's funny. UPS, Iran, UPS. We already did UPS today. We looked at Iran yesterday. Oracle, we looked at yesterday. THQ. Jack, I have no idea what THQ is. Why do you keep asking me for that? Is it really that wonderful? I mean, seriously. Am I going to be disappointed by picking a THQ? Am I, Jack? THQ. Oh, fuck no. Oops. Next. UPS. We've already looked at UPS. Lightning, I already told you about Target. Corner Scott, AMD, Advanced Micro Devices. How do you find the stocks you like? Peter, you ready? Google. That's it. Google. Okay, you go to Google. Dividend Kings list, 2025. Dividend Aristocrats list, 2025. Dividend Champions list, 2025. And it will just give you the list for free. You give them your email address and get, no, it's change F. No. Yep, I got that, Mr. Cayley. I can agree with you. Lightning, you already asked that question 4 times. Matana, DK stock. We'll look at it tomorrow. What do I think about PCSA? We'll look at it tomorrow. He won't learn until he has some skin in the game. Okay, Kentucky Hunter, I'm not 100% sure what you mean by that, but okay. C.A. Smith. WFS. What is WFS? WFS. World Financial Split Core. What the hell is that? It doesn't even show up, dude. All right, Jack, we already looked at THQ. It's a hell no. Tire Jr., thank you for that. Congrats. Lit up a hat and a mustache. Yay! Passion, how are you doing today? Tire Jr., what's going on? All right, I think I'm done. AMD, we looked at that one. Yo mama, they go sideways. No, your mama, they don't go sideways. They only look as if they go sideways. Okay? Do you see this here? This is your mama. This is AT&T. I'm going to open it up bigger so you can see it better. All right, there you go. Your mama, you see that? Okay. Down, up, 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 down. Okay, not once do I see it going sideways. They don't go sideways. They go up, they go down. They may appear to go sideways. And that's not going sideways. That's called channeling. It looks as if it's going sideways. It's called channeling. They still go up and down. AGNC, we looked at it earlier. That was a no. Jordan, we looked at Nike also. That was a no also. Some stocks go down so much, it goes to zero. All right, Charlie, you give me one that went to zero and didn't go up. Give me one within the last 6 months or last year. Within the last year that went to zero. Just one of them. Charlie, just one. Maeve, how you doing there, Maeve? Please don't do that, okay? What stock is that? That is AT&T. Justin, Beeb, what are some long-standing weekly stocks? Long-standing? Oh, AT&T, Bank of America, Wells Fargo, Home Depot, Lowe's, Procter & Gamble. Did I say AT&T? Baidu. Ooh, we'll take a look at that one tomorrow, Cocktail. AMD, no, we looked at AMD earlier. Tiger Twin, back again, huh? Do you ever roll your trades all the time? 86 is in the house. Most companies don't pay weekly dividends. I don't know of any company that pays weekly dividends. Sunshine, hi, I'm new. How to identify good investments? Sunshine, my best advice for you at this moment in time, come back again. Keep coming back, keep asking questions. If you don't make any money, you don't pay any taxes. Absolutely, Mikey. Well, here's an interesting thing, Mikey. You ready for this? Okay. Hold on for a second, Mikey. If you are an advisor and you just advise and you don't get paid, okay, you can borrow money from the company. And borrowed money is not taxable. How do you like that? SMCI, oh, hell no. Okay, I've done SMCI before. Oh, hell no. Mikey, what do you think about that? So let's say, hypothetically speaking, you have a bunch of stocks, okay? You got a bunch of stocks. You don't want to sell them because you're going to be taxed. You could, if you wanted to, take those stocks and go to a lender and say, hey, I have all these stocks. Let me borrow some money against my stocks. That is borrowed money. That is not taxable. And if you do it right, you make payments back to the bank or whoever you borrowed it from, and that is an additional tax write-off to a certain extent. Tesla, Eric, no dividends, no thank you. ULTY, yeah, no thank you. Is this the wheel strategy? No, it is not. It's the second half of the wheel strategy. Chad Sarton, dude, I tried getting a hold of you. I watched some of your videos. I like what you have to say if this is actually you. Because there's like 35 people pretending to be me, so I don't know if this person is you or someone pretending to be you. If it is you, send me a DM. I'd love to chat. I've seen some of your videos. Carlos, we're going to do that one, Carlos. Eric, Tesla is 1.5% of the 440s plus. Okay. Thank you there, Mr. Eric. TH Atlanta, ULTY. We'll take a look at it another day. But it's going to be a no because every time I look at ULTY, it's a no. The company's not even 5 years old yet. So why are we even looking at it? All right, Carlos. So are these options? Can you explain what this exactly is, please? Oh, boy. All right, we're going to do that tomorrow. Okay, Carlos? I got a bunch more questions to go to. It's past 11. And I like the question, I do, but it's a little bit long to explain. APP, let's take a look at it tomorrow. Simone just got here. Can you explain what calls are? I'm very interested in trying this. Okay, Carlos, a call is nothing more than the opportunity to do something. Okay, it's like the first right of refusal, or like a non-refundable deposit. Like you have a car, somebody says, "Hey, I like your car. Let me buy it from you." Well, let me give you $100. Hold it for me for a couple of days. If I come back, I'll give it to you. If not, keep the money. Something like that. Do you still offer training? Absolutely. Hey, KB, how you doing? Of course I do. Send me a DM and we'll chat. Mammum, what's your prediction for Alphabet? I don't have one. Yo, mama, more down ups equals sideways equals down up. Thank you, your mama. Tiger Twin, I'm 5 years from retirement. I need to learn the strategy. Tiger Twin, either DM me with your number, I'll give you a buzz, or sign up. You go to the website, sign up for a call. From what I understand, it's having a little bit of glitch. Cocktail XPEV, what the hell is that? Alex, maybe tomorrow you can explain the wheel strategy. I'm not familiar with it. I'm not going to do that, Alex. Okay, wheel strategy, you're selling a cash secured put before you do a covered call. Okay, I give one trading strategy, that's it. That's it. Last question, that was it. Carlos, what time? 9 p.m., sorry. You got too many channels if you're doing this free, saying tomorrow equals not answering. Yamama, basically, I am done at 11. It's past 11. I'm just doing the courtesy of answering the questions before I walk away. That's it. So it's not that I'm putting it off to tomorrow. It's just that I'm done at 11, and I don't want to be rude to someone and just walk away and not answer the questions. So if you have a question and you want to take a look at it, either show up early or come back another day. It's really that simple. Killatown, thank you. Your mama, too many channels equals too many questions. I'm going to agree with you. You're absolutely 100% right. 6 Eastern? No, 9 Eastern. See, I'm here in Florida, so we're at 9 Eastern. All right. But anyway, your mama, just to help you out a little bit. Hypothetically speaking, thanks, dude. You're right, your rug work, cool beans. So your mama, hypothetically speaking, my 2 boys and my son-in-law, so the 3 boys, are getting ready to do a broadcast channel, which basically what they're going to do is they're going to monitor all the questions and they're going to feed me the questions one at a time so I don't have to go through all the screens. He's going to be I look tired. Okay, your mama, here's my idea on that one. I'll get plenty of sleep when I'm dead. Who said that? Anybody know who said that? I'll get plenty of sleep when I'm dead. Was that Sam Elliott? Sam Elliott, I get plenty of sleep when I'm dead. All right, so yeah. So your mama, my 3 sons, oh, that's interesting. My 3 sons are creating a JFK said that. Did he really? Oh, JFK said we can't answer the questions of tomorrow with the answers with the wait a minute. We can't answer the questions of tomorrow with the knowledge we possess today. Okay, he said that. So anyway, my 3 sons are going to get a a broadcast room set up. So I'm going to be broadcasting and it's going to them first. And then they're going to take all the questions from all the different channels and they're going to cipher out the ones that are repetitive. So we're not looking at the same things over and over and over again. They're going to answer the easy questions. You don't see my comments? The voice of wisdom. No, I don't. Okay, so on TikTok, some words are filtered out. So if your comment has some of the words that are filtered out, they won't show up. All right, so that being said, we're all done. So let's turn off all these cameras and have a lovely day. We'll see you all again tomorrow night. Same bat time, same bat channel. And meeting there, done over here. Done over here. Princess, have a nice night. Done over here on TikTok. You guys have a great night. Not TikTok, what is that? That was, yeah, Mikey. I think JFK say, ask not what some random dude on the internet can do for you. That's exactly what he said. Bye, Jersey, Carolina Gold. Have a nice night. I just said good evening, sir. Well, good evening to you. Okay, that one's done. We're done here. Cool beans. All right. We are done. All righty. And we're done over here. Instagram. Yep, Mr. Cayley, I have Instagram also. But I don't really answer the email on Instagram. Isn't that weird?